Sandeep, merit in aligning with what I just flagged off that भी tariff लगाओगे तो cost तो अमेरिका में बढ़ेगा, इंडिया में कम बढ़ेगा. It will hurt Americans more rather than Indians.
That's true. So that's true of actually most tariffs. Any tariff that which the Indian government also imposes, actually the consumers pay for it. So similarly, any tariff which the US is imposing, largely the consumers in the US are going to pay for it. But for some of the decisions, the logic doesn't work as well. So let's see how the overall tariff picture plays out. Because from the Indian context, if they have to impose tariffs on the net balance of trade surplus which India has, I think 3-4 sectors dominate that surplus. Pharmaceuticals, some metal and capital goods, gems and jewelry, textile. So I think these are the majority sectors. So how they proceed on this, we need to see, because we might have the logic that it's going to hurt them, but every tariff which is imposed actually hurts the consumers more.
You've always liked the infra construction space. What about NCC? Quite a few orders coming their way, and just recently they've got their LOI for a project as sizable as 1,480 crore rupees for Bihar Medical Services Corp.
In the construction space, NCC remains one of the better companies given the work they have done on reducing leverage on the balance sheet, taking projects on a EPC basis only and not going into BOT, HAM kind of models where capital requirement is there. So last 1 year, most of these construction / capital good companies have suffered. One, because the stocks ran up too much too fast. Secondly, execution and order flows got impacted because of various elections, etc., reduced allocations by governments. And a lot of these things could actually come back next year. So I would think that the sector overall looks cheap now. And I think NCC is among the better companies in the space.
Sandeep, if you've endured the pain, now it's time to benefit from the gain. That's my limited point. Don't be in a hurry. अरे 100 रुपए का 80 हो गया, 80 का 75 हो गया, 75 का वापस 90 हो गया, बेच दो. Don't do that.
Yeah, so what will happen is that people see things moved up, then they regret that we didn't sell at the top, then markets fall, and at the right bottom, many people feel the urge to sell. And then as the market bounces back, they see how much it's recovered from the bottom and they want to continuously sell. So I think this is a psychology. Very tough to change the psychology actually across the board. But as someone who would look at more the macroeconomic and positioning as well as the psychological positioning of the market, I would think that people should not be in a hurry to sell across the board. Like obviously, if you've got some junk stocks or the companies which are not going to do well, because the overall market has fallen, you could actually exit the stocks which you just bought and you didn't know why you have bought them, and shift to others where you are more confident.
Now, one expensive stock is Varun Beverages. I mean, I don't know how much impact will happen because Varun Beverages also gets business from Tropicana and they get a lot of business from other areas also. But just a side kind of a stock, Campo Cola getting 10% market share in some states, which means that we are in for a cola war this summer. Negative news for Varun Beverages. Sandeep, these days it's fashionable that when Birlas have moved into the wire business, KI Industries and Polycorp have cracked. Then Adani's are saying that if we will move into wire business, those stocks have corrected again. I mean, Varun Beverages, where is that stock headed? It's expensive and there's competition in the cola market.
Yeah, it's an expensive stock for sure at the current valuations. But I think if some new company comes in, they take away 10% market share, obviously the market is not growing at 10%. So in the near term, your volume growth gets impacted. So that could play out on the valuations of Varun Beverages. But on the flip side, like no one actually drinks Campa Cola. So you need to take a decision based on that.
What about the other other pocket with stocks got smoked first because of Birla and then announcement by Adani that they'll move into the wire business. I'm talking about the KI, Polycabs and the Havels of the world. Everybody now wants to aim at that 90,000 crore market because P multiples are high. So go for it. I mean, that is what builders are saying. That is what Adanis are saying.
Yeah, pure wire company should never have got these kind of valuations at which they were trading. Like for a wire company, you can't give them a 35, 40, 50 PE ratio. I think it's absurd. So I think that valuation correction is happening. Now, wires and cables is also a big market. So, and new players will come in maybe after 2 years. Some absorption of the new players could happen. But I think it's more a valuation correction thing. And companies which have dominant business from wires and cables like Polycab and KEI, RR cables, etc. So I think those get most impacted. Cables would be more diversified with some positives coming from rest of the durables growth. AC growth is expected to be strong. But and on wires and cables, obviously, they will also get impacted. So there's less impact on them, but greater impact on the other companies. More in terms of valuation derating rather than their earnings being disrupted immediately, at least for the next 2 years, it won't happen.
Sandeep, we were discussing Manappuram after the Bain deal. Would you still be looking to add afresh or rather add more and buy afresh to Manappuram at all?
Manappuram we own, so from lower level. So when a stock goes to 52-week high, I'm not inclined to buy that. But I would think that it's a good deal, both from Bain, where they get in at valuations which are not very high, and from Manappuram, where they get around 4,500 crores into the company, so which takes care of any issues which they were facing with the microfinance subsidiary, and it gives them growth capital to grow their core business and other diversification, which they also have done. So I would think that the stock should do well. I would think that the stock should do well over the next couple of years.
But Sandeep, autos, we were chatting about this earlier as well with Kunal, Tata Motors, M&M also is easing off a little bit. Time to buy these dips in auto, or would you say stay a little away till April 2nd till you have clarity on which way the tariff policy is going to head?
I think other than the sentimental impact, most of the Indian auto companies don't get impacted by the tariff policy much. So I think it's more about how the demand pans out next year. I would think that the demand outlook for next year for auto should be positive given the tax breaks given in the budget, interest rates moving down, and liquidity improving, as well as better sentiments on the rural side at least. The urban sentiments still are subdued, but urban demand is also very credit driven. So if interest rates come down by, let's say, 0.5 to 1%, it has a direct impact on demand. So I would think it's positive. Outlook should be positive. The bigger fall has been in two-wheelers. So I think right now, from pure valuation perspective, the two-wheeler stocks look better placed. But directionally, obviously, we own M&M and also Maruti. So I would be directionally positive long-term on those stocks also.
If you like this video, then like, share and subscribe to ET Now.